Hello, everyone. Welcome to the Rose Show. It's the Rose Show. We're here with Steve Vetter from Annie Mac Mortgage Company. I've been dealing with Steve for many years now. What is it, like at least 4 years, right, Steve?
Yeah, I think so. 4 or 5, something like that.
Yeah, something like that. So, Steve is here to talk about some great things in the mortgage market and to keep people up to par on the nightmares that can happen as well. Steve Vetter, 23 years in the mortgage industry. He does veteran loans. He's an officer of Annie Mac. He is consistently ranked within the top 1% of all the loan origination in the United States. In addition to mortgages, Steve also owns multiple rental properties and a restaurant, a great restaurant in Toms River called Burger 25. The best burgers. I'm telling you, the best burgers. Steve lives in Toms River with his wife Denise, his son Aiden, and he also has a daughter who's getting married in June 2023, Alexis. And Steve has a lot looking forward, right? You have a lot to look forward to this year.
Yeah. Anybody ever price out a wedding these days? I have a lot to look for. You're sure. You're right. I have a lot to look forward to.
What are these weddings costing now?
So we've gone to places that the highest, guess this, $485 per head, and
Oh my God.
yeah, right, and
Oh,
that's prior to I'm sorry, I'm trying to adjust things here for you. So that's prior to anything as far as like your dress, your photographer,
all the
your
necessities.
yeah, $485 a head, and it's a minimum
Wow.
of 250 people. It's crazy. So yeah, it's
What place was that at 485?
the Chateau Grand. I think it's in North Brunswick, East Brunswick. It's a beautiful place. Like, don't get me wrong. Like, I mean, I would love to be able to say yes to that, but
Right.
I mean, I remember my wedding. I remember the 5 hours was done, and
In the blink of an eye.
I'm like, wow, that was a lot of money. And I would think I paid $110 a head when I got married,
Right.
almost 20 years ago now. So,
I know.
um,
Can't believe it was that long ago.
yeah, no, not at all.
Well, it's a
So.
good thing you only have one daughter.
I know. One daughter, one son. One son just graduated this year, which is awesome. So,
Awesome.
but yes, one daughter. That's what I said. I have a friend. They came over last night to our house, and there were what was it? She has
Wow.
and another one on the way. They didn't know if they didn't check they like to be surprised. So I'm like, four
Uh,
daughters. I'm doing the math in my head. I'm like, oh my god. So.
are they helping you with the wedding or are they just relying on daddy?
No, the parents are awesome. So there's definitely everyone's helping out. As far as Alexis and my daughter, she's we I honestly wanted to let her know that like I got your wedding. But the groom's parents, my son-in-law to be's parents, are helping in a way as well. So I mean, it's all good. It's all coming to fruition. It's all happening within a year now. So we're on June 3rd of 2023. So that's the date. We're all looking forward to it. So it's awesome.
Fantastic. Fantastic. So you got a lot of loans to close on top of the ones you closed already, right?
Yeah, yeah. Just when you think like, maybe I could kick back a little bit, it's like, oh, we're getting married. I'm like, well, okay. So it is what it is.
So everyone, Steve is amazing at what he does. He really is amazing at what he does. I've been in predicaments with my clients. My clients, they say one thing, and then right when it needs to get down to the nitty gritty, all of a sudden we're finding out. Remember that one instance, Steve? We're finding out that they own property underneath the VA loan somewhere else, and it's like what? And you can't do that with the VA loan, right? So tell everybody a little bit about what's going on now in this market, right? Well, we're finding it's kind of slowing down a little bit, but although there's still multiple offers going on, but they're just lasting a little bit longer. Steve, I can see you. Can't hear you. Can't hear you. Steve's gonna come back. There he is. Let's see. There you are. Can you hear me? No, I can't hear you. You were perfect before you did something. No? Thumbs up. Can you hear me? Not sure what's going on there. All right, everyone. We'll just wait for Steve to log back on. In the meantime, I hope everybody had a wonderful 4th of July. I believe it or not, I got lost in time last week. Completely lost in time. I didn't realize that Friday was actually Friday, and I had the Row Show last Friday, and the whole day went, and it was past 4 o'clock, and I was like, "Oh my God, Friday! Today's Friday." For some reason, I thought it was Thursday. I don't know why, but I lived Thursday twice last week. So hopefully everybody had a great 4th of July. I had a wonderful one.
Well, you there?
I'm here. Great.
All right. I'm sorry about that.
That's okay. I chatted a little bit about the 4th of July while we were waiting.
All right.
Last week, I actually completely missed the Row Show last Friday because I thought it was Thursday. I thought it was Thursday all day long. And then once it was like 5:30, and then all of a sudden it was like, oh my God, today's Friday. So I missed it. Okay, I don't see you. You were just there.
I'm trying to do one thing. I'll be right there. Are you there? Can you hear me?
I can hear you.
All right, give me one momento, and then I got this.
Okay.
All right, can you still hear me or no? You're good, right?
Yes, I could hear you.
I'm trying to turn my phone. So I'm doing this on my phone, and I'm legally deaf, and the way I hear is through a cochlear implant. So when I get a phone call, it cancels this whole thing out. So I think I just turned my phone off, which is good.
Okay.
So that'll stop it. So
Gotcha.
I apologize for that.
That's okay.
But that's what's going on. So some people are calling me, and it's literally blanking everything out. So I think I turned the phone off.
Right.
So I apologize for that, guys.
Yeah, no worries. Go ahead.
All right. So we were just talking about weddings, and that's fun, and it's very expensive, but it's awesome at the same time, and it's a life achievement. And yes, I absolutely have to produce a lot more loans than I'm used to just to pay for this wedding. If I want to, fund it by, obviously the money we make and doing mortgages and whatnot and so on and so forth. But I can't be happier for not only my future son-in-law, my daughter, my family. A fun fact, my son is going to officiate the wedding, which is awesome.
Aww.
So it's like a full, awesome. I can't wait for the day. So,
So Steve, how'd you get into mortgages? Was that something you always wanted to do when you were growing up?
No, not at all. So, I was working in retail sales. Nobody beats the Wiz back in the day.
Nobody beats the Wiz. Oh my God. What a
I was just
flashback.
It was awesome. So I loved it. I loved the business. I loved the interactions with the customers. And I rose to the ranks. I was young. I was, at 20 years old, I was a store manager there. Um, right out of high school, went right there and did really, really well. And I realized one year it was Thanksgiving. There was a light bulb that went off, and I said, I'm working the opposite schedule the rest of the world. I want to be, why are we open on Thanksgiving, number one? And Christmas season was awesome for everybody, and for me, it was 90-hour weeks, and I just wanted a different lifestyle. I knew that I didn't want that for my future, so I literally left a position making great money at 20 years old. I think it was a $75,000 a year salary. And I said, I got to do something different.
Wow.
At 20 years old, I got to do something different. And I know I don't want this for my future. And I decided just doing a lot of research. And I remember walk in Main Street in Toms River, there was a mortgage company. It was called Champion Mortgage. When your bank says no, Champion says yes.
Champion Mortgage. Oh my God.
But I remember going on the interview and they were asking me, well, what's a mortgage? And I'm like, it's something you need when you buy a house. I'm like, outside of that, I'm pretty new at this. I honestly, I don't know. I don't know enough about it, but I love interacting with customers and people and so on and so forth. And they did not want to give me the job. And I just fought through calling and calling and calling and, like, listen, I'm really interested. What do I got to do? What kind of courses can I take? I really want the opportunity, just a shot. I don't care. It's full commission. I don't know. I don't need a salary.
Go ahead. I can hear you now, but I can't see you.
Bro, you can't hear me, right?
I can hear you and see you.
Oh, thank goodness. All right. So, so then I was legitimately, I begged for the job essentially, and they gave me a chance. And the rest is history. I remember my first month. I had sold, I think, 16 loans for something like
Wow.
at the time the average loan size was low, but it was like right around like $1.5 million. It was really, and I was the number one person at Champion Mortgage from month one on. It was awesome.
That's great.
And it
And
was
that wasn't any training. That was just being a sales,
no,
right?
no, there was definitely training. They had a two-week crash course on, amortization and mortgages and terms and, piggyback loans and things like. It was all refinances though. It wasn't any purchase money business. So it was little bit different. We would take somebody's situation where they might have a whole lot of debt. Their mortgage might be, $1,500 a month, and then all their credit card debt was another $600 a month. So they're spending $2,100 a month, and we were able to do refinances for them, and maybe the mortgage payment would turn into $1,600. But overall, they would save $500 a month from where they were at, and that was the sale. That was what we were selling. We were selling debt consolidation, money for weddings, things like that. So that's what the real sale was, and that's what, and we were dealing with customers. At the time it was considered subprime, but it was helping people. We did good loans for people. Like when I say good loans, like, you might be struggling now with what you had financially. You might be late on credit cards or even mortgage payments back then, and we would still give you a loan because we knew at the end of the day that loan would save that person X amount of dollars on a monthly basis. For example, the one I just gave you, save $500 per month. It's going to obviously put you in a better position financially and help you. And I fell in love with that product, honestly. When I worked at the Wiz, it was an electronics store. I would sell a TV, and they would walk out the store, and okay, they have a TV. It was a thing, right? And when I went to mortgages, I really quickly realized that I wasn't selling a thing anymore. I was selling something that I thought was an amazing thing, an amazing opportunity for somebody to change their life, to get money for that college education that they promised their kid, to pay off high interest rate credit cards, or to just save money on a monthly basis. And that would enable them to, add, 2 or 3 times a month, they can go out to dinner with their family now, where before they couldn't. So that was the kind of sale that was amazing to me. And I've never left the business since then.
That's awesome. Awesome. But a lot has to do with being able to relate with people and people liking you, right? And just
yeah, you
gaining,
need to, I mean,
right?
like, listen, sales has that stigma around it a little bit for some people, but at the end of the day, sales is teaching people and understanding why, right?
And being there for their
So,
life, right? It's
you
a
know,
lifetime.
like why are you doing something? All this, like, and lots of people are like, yeah, I mean, I could go in so many different directions here, but like Zillow, for example, realtors hate Zillow. They're like, oh no, Zillow can never replace a great realtor. And the reason why, in my opinion, is Zillow can never ask you, why are you moving? Why do you want to move? And Zillow can ask you how many bedrooms you want. Zillow can ask you what area you want to live in. And Zillow can ask you all those criterias about the house and what price range you think you want to be in. But Zillow can't ever, and no computer can ever ask you why. And that, as
help you figure
salespeople,
out help you figure out a better future as you go along.
right? You know, the greatest realtors that we all work with are the ones that understand their customers. They're asking, like, what is it that's uncomfortable about your situation now that's making you want to upgrade? And it might be, I want a dog. Think
Right,
about it. I want a dog. I want a dog,
right,
and I currently live in a condo and I'm not allowed to have a dog.
right,
So, as salespeople, we don't uncover those things, then we might as well just send them to Zillow, because Zillow can do our job for us, right?
hmm,
So
right.
if we ask why, we can have a good understanding and we can get that amazing fenced-in yard where everything's going to work out perfect with the dog park down the road, and so on and so forth. So those are the things that I think differentiate great salespeople, is understanding your customers and then teaching them what's available and what's out there, because sometimes they don't know that there's a dog park down the road, and Zillow will never tell them that.
Right, right, right. What are the interest rates now?
So the interest rates have skyrocketed. When I say skyrocketed, the government is trying to control inflation. They're trying to control chicken wing prices. They're trying to control burger prices. They're trying to control everything, gas prices. But the way that the tools that they have to do that is raising interest rates to stop people from borrowing cheap money and buying everything. So
Mm,
when people don't have access to cheap money, it's one mechanism that controls inflation. So because inflation is so high, really, in my opinion, driven by supply and demand. Once the supply can catch up to the demand, we will have no problems with inflation. But one of the
right.
ways they're doing it is they're raising interest rates. So interest rates started off the year in the threes, and now they've touched and come back down a little bit to the sixes. So you just doubled it.
Mhm.
But again, when we were in 3% interest rates, can I just tell you about, like, I wrote a post the other day and I just want to share it with you guys.
Yeah.
I'm gonna look away, and I think it's important to understand. I said,
Hmm.
listen, I said my post was, it's buying a house now is cheaper and easier. Lots of people immediately were like, what do you mean?
Hmm.
So look, 6 months ago, when you go to buy a $400,000 house at 3.5% interest, you couldn't buy a $400,000 house for $400,000. You had to overbid, and you might have to pay $450,000 for that house, right? So
That's.
now all of a sudden, your $400,000 house is costing you $450,000, but you're
Hmm.
willing to do it because you have an interest rate at 3.5%, right? So the payment without taxes and insurance, $1,616 a month. All right. Fast forward 6% interest rates, or 5.5, or somewhere in that neighborhood. Now all of a sudden, that $400,000 house, well, guess what? 6% interest rates flushed a lot of people out of the market. So now, instead of having to pay $450,000 for that house for 400,000, you can buy that $400,000 house at asking price of 400,000. That's a
Hmm.
$50,000 savings, right? So the interest rate at 6%, which is kind of worst case scenario right now, your monthly payment is about 1918, $300 more for the same exact house, but you're buying it for $50,000 less.
Right.
Stay with me here,
Hmm.
right? So realistically, every single economist that's out there knows that these interest rates are temporary to try to control inflation, right? So within the next 3 years, we're all anticipating that the interest rates settle back down and come back down to a normal, healthy environment of somewhere in the mid threes, right? So when they come back down, That means you can get that. You now have that $400,000 house. You've
Right.
been paying $300. It's actually $302 extra. And let's say it takes a full 3 years to get back down to 3.5%. Well, you refinance, but that time period, it costs you $300 times 36 months. It's around $11,000, a little
As
less than
opposed
that.
to 50.
It's a hell of a lot better than paying $50,000 over asking price.
Right.
So again, it's easier because you don't have to bid against 10 other people.
Mhm.
You're alone, you're bidding alone, and it's cheaper. It's
Right.
You don't have to bid $50,000 over asking. And at the end of the day, yes, it costs you more money because the interest is more, but we all know we're going to refinance that mortgage within the first 3 to 5 years. And if that's the case, you're $40,000 ahead of the game
So true.
now versus 6 months ago. So
Great
listen,
way to break that down. Great way to break that down, right? Because you have people like, oh, we're going to wait until see if these interest rates go down. No.
when the
Don't.
interest rates go back down, we have a supply problem in the housing industry. And we can talk for hours upon it, but the bottom line is it's all about education and understanding. When a customer comes to me, they get educated. They know exactly what's going on. They understand that waiting could absolutely cost them a whole heck of a lot of money. If interest rates come back down, so do the crazy biddings that's going on. So now all of a sudden, a $400,000 house is $450,000 again. So,
Right.
buy the house for $400 now, and then refinance when the rates are there.
Right.
If you can afford it. Now, listen, obviously you need to be able to afford the extra $300 per month. But I have often showed people, like, why don't you put a little bit less money down and let's get rid of some of the debt that you might have, and your overall financial picture will be cheaper. So there's definitely ways. It's talking to the right person and understanding your financial situation and what your down payment is and what your payment goals are and everything else. But it's working with the right team, right? So,
Right.
if you're not working with the right team, you could sometimes get, really defeated really quickly because you don't really understand what's out there and they're not pointing you in the right direction. And they didn't ask you if you had a dog,
Right. What are the number one tips you'd give somebody before starting to look for a home?
I don't know. So I would tell them,
Yeah.
no. So before if you're looking to buy a home in the next few months, I would definitely, start looking at your credit. The higher your credit score, the better the mortgage you're going to get. The people that get the best mortgages out there, they have a 760 plus credit score. But every 10 points below 760 is a different threshold in interest rates and types of loans and so on and so forth. So if you want the best mortgage for you, I would really focus on your credit. I would focus on not accumulating any extra debt. I would also look at your individual credit cards individually and look at each individual one and say, how much do I owe compared to my balance or my limit? And if that number is higher than 30% on any one given credit card, try to pay your credit cards down below 30% of the overall limit. And if you could do that, your credit score should go up pretty quickly. If you're lacking any credit, I would suggest talking to a parent and asking if they can be added as an authorized user on one of their credit cards. That can boost a credit score like you wouldn't believe. So a parent, I did it for my 17-year-old son. My 17-year-old son has better credit than some of the customers that come here and he does nothing of his own because he's not legally allowed to, but he can be an authorized user on my credit cards, and that immediately gives him a credit score.
Right.
So that's just a good thing to do. But pay down your debt and don't accumulate new debt.
That's
And
great.
don't buy new cars during the home purchasing process. Just that can happen too.
Yeah, right.
Right,
So let's give them some information on the different types of mortgages and what do you think is the best mortgage for them to go for? Or how to avoid PMI, right? How do they avoid PMI?
Well, so PMI is not bad, right? Number one, PMI is called private mortgage insurance. It's on conventional loans. If you don't put 20% down, it's on.
Can't hear you.
Oh.
Now I can hear you.
You can hear me. All right. Sorry. It's on FHA loans, on every single FHA loan. It's on USDA loans. so on and so forth. So the reality is there's multiple different loans. I'll briefly go over them. If
Yeah.
you're a veteran, no money down, no PMI, amazing opportunity. If you're a veteran and you're saving money, you don't need to, because you can buy a home with no money down and no PMI. Number one. If you want to work within a rural area, what I mean by that is, in this area, it could be Bayville, Forked River, Lacey. There's a loan product out there called USDA. We specialize in them. We're the number one lender in New Jersey for them. No money down. There is PMI, but there's no money down. So you can buy it with 100% financing. People don't know this stuff,
No,
right?
they don't. They
The
don't know.
big, no money down, like legitimately zero money down. And we're back to getting seller concessions where the seller will chip in towards your closing costs. So you can literally buy a house with no money down.
What's the credit score on the USDA? Tell them
640 and above, 640 credit score and above, and you don't need perfect credit. You have to be under certain income levels, and you have to geographically be in what's considered a rural area in New Jersey, which is, again, Forked River, Lacey. Those areas are considered rural for Jersey. There's more to those loans, but again, they're a great opportunity, and you could buy a home for no money down. A lot cheaper than renting. Rents are through the roof. The average home is renting for over $3,000 a month.
Oh my God.
In Toms River right now, the average home, like, you can't get under $3,000. It's ridiculous.
It is.
So there's those are your two no money down options: VA if you're a veteran, USDA if you're not, and then there's FHA. Let's say you have a less than stellar credit score and not a large down payment. FHA is the perfect loan for somebody like that. There is PMI, but again, any loan you take out now can be refinanced in the future if your situation changes. If equity increases, you could refinance and take cash out and pay off debt, or do whatever you want with, or improve a bathroom or something like that. And then there's conventional loans. A conventional loan requires a minimum down payment of at least 3%, but you could put any amount of money you want down. On any loan, you can put any amount of money you want down. But anything less than 20% is going to carry something called private mortgage insurance. And let me explain that to you really, really quick. Private mortgage insurance is designed to allow a conventional loan to actually exist if somebody doesn't have 20% down, right? So if you don't have 20%, you can get a conventional loan, but you have to pay an insurance to cover the mortgage company just in case you default.
Right.
But you could pay it on a monthly basis, and it would make your monthly payment higher. But what a lot of people don't ever get offered from mortgage people is you can pay for it one lump sum at closing. And often we see parents giving their kids a gift and say, I'll pay for your PMI for you. And now you don't pay PMI. So it's as if you put 20% down. Your parent gifted you the PMI. It's awesome. So now you have a 3% down, 5% down, 10% down, whatever your scenario is, and you're not paying PMI on a monthly basis. Somebody paid for it for you. You can get the seller to pay for it for you sometimes. So it's don't let your circumstance or what Uncle John said at the 4th of July barbecue discourage you from what really could happen. You really have to talk to somebody that knows what they're talking about and go over your particular scenario to understand what's available, because Uncle John might not have had all the options that you have.
Right.
He might not have talked to the right mortgage person, or might not have talked to the right realtor or whatever. So
it's all about who you work with. So accessible. I mean, really, you that phone doesn't turn off.
I know.
So yeah, mortgage loans, definitely. And then so you're doing fantastic in the mortgage industry. Great team, people. And then you decide to open up a burger place.
Yeah,
Tell everybody how you decided to do that.
So, listen, it's 9 years now.
Wow.
Burger 25. We've moved the location. We're in a bigger location. The place is amazing. It keeps me sane, as much as most people would say it keeps you insane. The mortgage business is awesome, but sometimes very stressful. And honestly, if there's a problem with a mortgage, I lose sleep over that. If there's a problem with your mortgage and you're about to purchase a home, and something is happening where it's going to prevent you from purchasing the home, my goodness, that's stressful for us You have no idea, right? So
Yeah.
we're
Yeah.
just as stressed as you guys are when you're purchasing a home to make sure that we avoid any mistakes and so on and so forth. But when something goes wrong in a restaurant, I mean, I just give them another burger and they're happy. I give them their $8 back and they're fine, you know? So it's, you know, and not to discount it like that, but it's, I got into the burger restaurant. Honestly, I thought I was not going to be able to do this job anymore because I was going deaf. And I
Mhm.
was like, you know what? I got to diversify. And if I can't hear customers, then I'm gonna go ahead and need to diversify and do something different. So we opened up a restaurant, and it's been awesome, honestly. But I got 4 years ago. I got my hearing back. I went from 4% word recognition to 98% word recognition with the help of a
Oh my God, that's awesome.
cochlear implant. So that's where I'm at now. So I'm good with my hearing, and I have a restaurant, which probably added a lot more chaos to my life than I needed, but
That's
so on and so
okay.
forth.
That's okay.
You know,
It all
yeah.
works hand in hand though, right?
Yeah, my wife works
Well,
the day to day. I mean, and whatever, and I do the marketing, the finances, and stuff like that behind the scenes. Like I invent 95% of those milkshakes and burgers that are on the menu, though.
really?
Yeah.
Oh my gosh. I don't know how you stay like that.
Depends.
I'd
I
be
don't have my.
stressing up all day
It's.
long.
I know taste testing. It's funny.
Wow, that's awesome. That's great. Well, Steve, for somebody to get in touch with you, what do they need to do?
Honestly, the best way to get in touch with me is call me or text me. My cell phone number. You ready? It's 732
Mhm.
674 4783. I'll teach you how to buy investment properties, buy your first home, whatever it might be. I can help you. You know,
You have how many investment properties now?
I have a total of 10 investment properties and my home. I'm purchasing right now my 11th
That's fantastic.
investment. So it's
You want to
been,
tell me a little bit, elaborate a little bit on that really quick?
yeah, absolutely. So, I tell people all the time the story is 7 years ago, I bought my first investment property. I didn't have enough money to do it, so I borrowed money from my 401k. It was a $40,000 401k loan. And a year later, after I bought that house, I looked at it and I realized there's enough equity in this home to borrow and get my initial investment back out, and enough money to buy another one. And a
Mhm.
light bulb went off, and I did that. I refinanced. I took out money. The refinance mortgage, the rent was still covering it, so I was able to then take that extra money and purchase another home. And I rinsed and repeated over the years. And I tell people all the time, if it wasn't for that $140,000 401k loan, but that's all I've put into it.
That's fantastic.
$140,000, and then it's been refinance, repeat, so on and so forth. And I've gotten lucky with a couple good values and a couple good purchases, but it's there's a saying out there: liabilities should be paid for by your assets. And if you don't have any assets and all you have is liabilities, you're constantly going to chase your
Mhm.
next paycheck. So stop chasing paychecks and start accumulating some assets. An asset, an asset is simply something that puts money in your pocket. Your home, although some of us will call it an asset, it's a liability. It's costing you money on a monthly basis.
Yeah.
My wife wanted a Range Rover. This is a funny story. 2 years ago, my wife said, "I want a Range Rover," and I said, "Oh yeah, yeah. All right, a Range Rover is $800 a month. I could go buy a Range Rover and pay $800 a month, and that's a liability. Or I could go buy a house that makes $800 per month and use the $800 to pay for that liability." So it's two different ways of looking at it. Some people will just go buy the Range Rover. I told my wife, I said, "Okay, you want a Range Rover? We got to buy a house. Let's go find a house to buy that's going to pay for the Range Rover." So it's a mind shift, right?
Mhm.
So once you shift your mind and you start understanding what an asset and a liability is, and the fact that assets can pay for your liabilities, whether they be boats, cars, houses, whatever they are, you can buy something that makes enough money to pay for those items. It really changes everything.
Yeah, because it cancels it out. It doesn't come out of your pocket.
Right. So if I lose my job tomorrow, mortgages don't exist, and my restaurant closes, I now have enough cash flow
Right.
You know, I'll put my laundry out here. I make over $7,000 a month in cash flow from
Mhm.
those houses,
That's fantastic.
and pays for my life. You know, so.
Right. Right.
And it's, there's some people. Here's one thing. Some people come to me and they have a child. They're just having a child, and my suggestion to them is, listen, you're going to have a wedding to pay for and college to pay for. Buy a house now for that child. Buy a house right now. Have somebody pay for it. I don't care if it makes you a dime on a monthly basis, as long as you can cover the monthly mortgage payment with the rent. In 15 years from now, you're going to have an awesome asset that you can sell or cash out, refinance, or do whatever you need to do, and pay for that wedding or pay for that college education. It's a great way to save money.
Brilliant. That's brilliant, right?
Yeah,
That's a
it's
great,
just a mind shift, and
great
people.
advice to give to someone that's starting off. That's for sure.
Yeah,
Yeah,
absolutely.
that's great. This was an awesome, awesome session. For sure. I could talk and talk and talk
Yeah,
forever. But what do you
yeah.
know, Steve? It's time to
All right, the road show's over, huh?
go. Yes, but I thank you so much for coming on. We definitely have to do this again. I have so much more that I want to talk about, but
Yeah.
we'll catch up at another time. Okay.
All right,
Everybody, if you need a good mortgage representative, Steve is the man. Listen to this again if you'd like, so you can get his information, or chat me, DM me, and I'll give you his information. All right.
awesome.
Thanks.
Thanks, everybody.
I'll
See you
talk to you
later.
later. Bye.
Bye bye.